significant because a lot of people are expecting interest rate going down after Fed announced cutting rate.
Can we do it one more time? Sorry.
Okay.
Hi everyone, welcome back to this week's market update. Today we're diving into some important news on mortgage rates, refinancing, and the broader housing market trends. Joining me, as always, are QD and MC to help break it all down and explain how it affects you as buyers, sellers, or current homeowners. Let's get started with some numbers. Last week, mortgage demand dropped a whopping 17% as interest rates climbed to the highest level since August. The average contract interest rate for a 30-year fixed mortgage is now 6.52%, which is up from 6.36% just the week before.
Yes, this is significant because a lot of people are expecting the interest rate going down after we hear Fed announcing they cut 0.5% of interest rate like almost a month ago, right? But the result is go opposite way. We see interest rate increase instead of going down. So this means like for buyer, borrowing getting more expensive, and higher rate meaning higher monthly payment. So buyer, if you are thinking about buying a home, you need to consider how much you are willing to pay every month. Yeah.
So for what happening right now, rate been going up, like right after September 18 when Fed announced to lower rates. We all expecting the rate going down, but it really not. So what happened right now with the market shift for the sellers, I think the number of buyers is less now because when the rate goes up, their monthly mortgage payment is go higher, and some of them might not even qualify, or they qualify for less. So that means we have less buyers in the market at the moment because of the interest rate. So for sellers, I think it's time to strategize, maybe sweeten your deal so that you can sell your house or your property quicker. So that's what I can say.
Okay. And refinance demand also took a big hit, dropping 26% week over week. People are holding back on refinancing because the rates aren't as favorable as they were recently.
Right. If you are a homeowner who have been thinking about refinancing, this data show like a few people may think that it's worthwhile to do refinance right now. But keep in mind for a buyer who purchased a home like a year or 2 years ago, when interest rate is still higher than 7%, in some case I saw higher than 7.5%. It's still worth to refinance because if you can drop like 0.5% or maybe almost 1% of your interest rate, you could save like 300 or 500 in some case. That's a lot of money.
Right. And even though the refinance application dropped below 50% for the first-time home buyer, I understand that some of you don't want to refinance right now, but I look at it this way: if, like Cutie's saying, if you can lower by 0.5%, and with the mortgage right now, it's really big mortgage. Like people have 600,000 mortgage, 800 or even $1 million mortgage. With 0.5%, you save a few $100s a month.
Yes.
And I would love to do that if I am able to save $100. I mean, a few $100, like 300, 500, 700, or $1,000 a month. I would love to, because look at this. Look at this way. With $1,000 or $500, you can buy food for your family. I don't know how much you spend for your food monthly, but I think with $1,000, it's plenty to buy food to bring home and cook for your family. I would love to do that. And I know some of you say, I'm going to wait. Okay, so why don't you do it now? And then 6 months later, you do it again. So you don't have to wait. Why are you waiting to save? I remember before September 18, I quote rate and I lock rate for some of my refinance application, like 5.5% interest rate for 30-year fix. And I call back a lot of my clients, and some would say, oh, I would like to wait for it to go lower. But look at this. This is a lesson learned for everybody. When you get good rate, just lock it in. And you can only lock it again 6 months later. Now, for those people who didn't, turn in the application back then, now we don't know when that rate gonna come back, like 5.5% gonna come back. We don't even know.
Right.
So it's like people missing a big chance.
Right. Even though like there will be 2 rate cut this year, just estimate, but it's no guarantee the rate gonna go down, right?
Yeah, because remember, the rate cut that the Fed announced is called federal fund rates. That's the rate that bank lend bank overnight. It's not the mortgage rate that home buyers are getting when you do a mortgage or you do refinancing or you purchase a loan. It's different. It's different rates. It does affect, but it depends on other factors as well. It's not just like the federal fund rate drop, then your rate drop. No, it depends on other factors. And you don't know what's going on. It might be politics right now. I think it's politics or something else. But we don't know exactly what's going to happen. Okay, so as long as you can lock in a good rate, and if your loan agent call you, should do it. That's what I'm saying.
Yeah. And if you are curious or want to find out what is your new rate or lower rate, you can go to our website at pacificwidemortgage.com. So you just enter your scenario, like home price, loan amount, primary home or single family. The system will give you the rate for refinance, so you can compare how much you can save.
Yeah. That's right.
And mortgage applications to buy a home fell 7% last week too. But interestingly, they're still 7% higher than the same week last year. So it's not all bad news for buyers.
Yes, absolutely. So more homes are coming on the market now, which is open up more opportunity for the buyer, and especially first-time home buyer. And if you are waiting for more inventory, now is the time to check back to the market.
That's right. And for FHA loans, we see that the FHA loan application doesn't change much. So for people who buy home with low down payment, like 3.5% down payment, this is an opportunity for you because there are more inventory for you, more option for you to choose from. So that's what I can help you with. Like we can help you with the FHA loan at Pacificwide as well. And you can go to pacificwide.com to find one of our agents or brokers who can help you with your FHA loans or with your purchase transaction.
All right, and now let's talk about the steps that buyers need to take to prepare for these market conditions. Buying a home is a big financial decision, so you want to be smart.
Yes, exactly. So first, make sure you have a strong credit score. The better your score, the better term you will get with your loan. For example, someone with a higher FICO score, 780 to over 800, may get a better rate than someone only have FICO score around 600. And you can always boost your credit score by paying off more debt. Let's say you have 5 credit cards and you have been using a lot, max out. It's the time to pay it off and wait for a month or two to get everything reset, and then you get a report from your credit company to credit bureau so that your credit could increase. So keep your balances low if you plan to buy a home anytime in the short future.
Yeah, so I agree with QD that when you have a good credit score, you have better interest rate, and that can save you a few $100s a month already. And like QD also advised to pay off debts and stuff like that. Don't do it yourself because you don't know which way is the best way to pay off. Like for example, right? If you have 5 credit cards, right, and then you have balance on all of them, and if you have to pay off all of the debt, that's maybe too much money. It may be $25,000, but when you come to us, we will look into your credit reports. We do some analysis. We know exactly how much you want to lower the balance so that you have the best credit score. In your case, because we have the system that run your credit and analyzes and will tell us exactly how much the balance should be and how much score you're going to get. For example, if your balance was $5,000, it will suggest, okay, pay this down to $2,000. So you only have to pay $3,000 instead of $5,000, and then you still have the best score. In some cases, instead of paying, okay, if you pay $5,000, pay off completely, you don't have the highest score. It's just ridiculous. It's just the system worked that way. We don't know how it worked, but sometimes the balance is 5,000 and you pay off 5,000, your score improved by 20 points. But if you pay it down to only 2,000 balance, your score might improve by 30 points. So it's really, really not what you think. Oh, you paid out everything, you had better score. No. Come to one of us. We help you to analyze your credits, and we show you exactly what to do to improve your score. So you can call one of us here, or you can go to Pacificwide.com, find one of us, and work with one of us. Do not do it alone. You need to do it with some professional, okay?
And another important tip for buyers, start saving for your down payment. While 20% isn't always required, the more that you can put down, the less you'll pay in interest and mortgage insurance.
Yes, that's right. On average, people are putting down about 14.5%, but it's very case by case. The key is to save as much as you can so that you can put more on the down payment. Remember, the more you put on down payment, the less you borrow, and the less you borrow is the lower monthly payment. So that's the good move to go, because we have a couple of scenarios when we have a borrower who is the tech company. Tech, they receive a lot of stock, and they have a large amount of stock in account, and they don't want to put those. They want to sell that stock. They think the value could go up, and they put very minimal down payment. As the result, the monthly payment is really high because you have to pay mortgage insurance if you're down less than 20%. And then they was asking me, should they sell some stock, put in towards the down payment? I did sit down with them and do some calculations. Turn out they don't have to sell all the stock. They just sell a small portion of it to put towards the down payment to get it at least 20%. You save on the mortgage insurance. You have the lower monthly payment, because if somebody think the stock will have increase in value, you have to put it this way: if you borrow more, you have to pay more on interest. If you pay less, you're saving, and that's investment or return.
So so what Kitty is sharing is, which point is the ultimate point where how much you need to put down payment and how much you have to sell your stock. That's the point where you need a professional to work on it and to help you, right?
Yes, because of 100,000 stock could increase to 120 by the end of the year or two. Same thing, if you put 100,000 in your mortgage into your down payment, you borrow 100,000 less, and then you pay less interest, right? That's still creating money, right? Not losing anywhere.
Exactly.
Yes.
So I think it's also one more thing I want to say. It's always the safest to invest the money into your home. I think it's more safe than it's better than to invest in your stock. I mean, okay, investing in real estate or investing in stock are both investments.
Right.
They are both investments. But which one is more safe? Okay, real estate. Okay, real estate is a lot more safe because it go up slowly, and stock maybe go up really high and really fast, but it can go down really fast as well. So also, by the way, just work with one of us. We know exactly what we need to help you, and we know what is best for you. If you come to us and you tell us what your situation, your current situation, and we know exactly how to help you. And also, I think I want to share with you something about okay, when you buy a home, right? Beside your monthly mortgage, you have to pay monthly property tax, and monthly home insurance, right?
Yes.
And also, when you own a home, sometimes something break down. You have to have somebody come over to fix stuff around your house. Doesn't matter. It's an old home or a new home. Something always happen. So a cost for maintenance is something you need to consider. So, like, we have to consider cost for maintenance, and we have to consider monthly property tax and monthly insurance. So when you buy a home, you have to pay monthly mortgage and all of it. It's not just monthly mortgage. So want to prepare for that. You have to make sure that you have at least 6 months in advance to for like a emergency fund in case you lose a job or something happen, like you get sick or somebody in your home has some problem. So before you go buy a home, you need to see one of the loan agents or real estate agent. They can help you to see if you really qualify, you really safe moving forward purchasing a home. Don't just buy it because you want it. Because if you're not having your financial, what do you say? Your money or your saving that will help you to make your monthly payment. If some things happen, then you might lose your home. So work with one of us.
That's some good advice, MC. And that's it for this week's weekly market update. To all of our listeners, whether you're looking to buy, sell, or refinance, we hope that this breakdown helps you navigate today's housing market with confidence. As always, thanks to QD and MC for joining us, and we'll see you next time. Don't